guys, welcome back to the channel, and today we're going to be reacting to
2025 recession. Here's what the experts think.
The economic word of the week: Trump-session.
It's just policy uncertainty. Markets don't like it.
There is going to be a period where it's going to be panic at the disco.
Yes, tariffs at that kind of level, that would not be good for U.S. economic performance.
Fears of an economic slowdown induced by the president's trade policies have escalated this week after an interview with Fox where he said this.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition.
The implication being that Trump likely intends on pushing forward with raising import tariffs, even if it means creating some economic pain in the short term.
Is this
and boy,
a
did
recent video?
Yes. It's 1 day ago, I believe. Yeah.
Financial markets react. The S&P 500 dropped nearly 2% at market open and down nearly 3% on the day. The Nasdaq composite of US tech companies took a 4% hit, and it was a bloodbath for some individual stocks. Tesla down nearly 16% on the day, now trades 54% below its all-time high. Nvidia saw a couple $100 billion of value wiped out and sits 30% below its peak valuation. Not everything was in the red, but it was a pretty brutal day for stocks. The comments from Trump were accompanied by the release of new economic data and experts weighing in with their forecasts. The Federal Reserve Chairman Jerome Powell, JP Morgan, and Warren Buffett, just to name a few. So let's see what they had to say, starting with the investment bank Goldman Sachs. To start the week, Chief Economist Jan Hatzowitz released a research note in which Goldman provided
Costco falling too, 6.5%.
a downgraded forecast for the economy in 2025. This comes just a few months after they provided a very positive outlook.
We see several strong tailwinds pointing to solid U.S. growth in 2025. Our baseline forecast is 2.5% growth, well above consensus.
They viewed inflation to be on a continued path towards the 2% target over the following years, and that Federal Reserve rate cuts in 2025 would be a tailwind for business growth and investment. But there was one risk that they noted could derail their prediction.
The biggest risk to our outlook is just how much of a tariff increase the Trump administration will impose. But in our risk case of a 10% across the board tariff, we'll actually get a reacceleration in inflation to 3% plus, at least for a period of time.
What was
That's 10%, and he wants to do 25%, I think, and then 50% on Canada tariffs.
only considered a less likely risk case in December now appears to be playing out. Hatzowitz in his press release said, "We now see the average US tariff rate rising by 10 percentage points this year, twice our previous forecast and about 5 times the increase seen during the first Trump administration. A large part of this comes back to Trump's plan to install reciprocal tariffs and how broadly they will be applied. The European Union, for example, has a value-added tax, or VAT, of about 20%. That tax applies on all goods and services sold domestically within European countries, but it also applies to companies importing goods, say from the United States."
Paying the VAT tax is the companies, and then the prices are adjusted to pay those VATs, or
It's
is
included
it...
in the end price.
Oh, okay.
Which, that's why everything is more expensive in Europe. Because, by everything, I mean, like, American goods. Like, for example, iPhones, MacBooks. Like, people come here to the States to buy it and then bring it back to Europe.
Do you have to declare it?
Do you have to?
Oh, I don't know, because I know how
No.
like the housewives, when they go to shop like in Europe for designers, to like get the money back, I guess, on the tax or something, they fill out a specific form.
Oh, well, okay, so you would have to declare it in theory, but if you do declare it, you will have to pay VAT. So kind of defeats the purpose.
Okay.
Okay. Whatever you buy. But the logic, having reciprocal tax or tariff, whatever you want to call it, is not bad. I think, like, if Europe charges American goods taxed American goods, why should America tax European goods? However, it's just so fucking sudden, and it would raise prices of everything. I don't think that's the way to. I don't know. Start imposing a tax of like 1% and increase it over like every 2 years, increase it by 1%, some shit like that. I don't know, some sort of gradual, because to me the reciprocal, I feel like that's fair. I don't know, I don't think it's unfair. Like if European company, because also that might bring European tariffs down too, so it would be the cost of the stuff would cost less in Europe, and that would make them buy more American products too. So maybe, but Yeah, it's just doing suddenly all of the sudden, oh yeah, let's put 25% on everything. That's just ridiculous. Like that, like we can't do that.
But the response of Europe was to also put tariffs up to
No, no,
match or
no.
to.
Europe always had tariffs.
Oh, they already.
They
Okay.
always. That's what I'm saying. They always had that.
Because what I heard is Canada. I hear matching.
Yeah, Canada. I don't understand. If Canada has no tax on American products, I don't see why we need to do on Canada. No, but in terms like when talk about Europe here, in theory, I see the logic there. It's just the execution. It can't be that oh, let's do 25 on the dot. No, it can't work like that. There has to be some sort of plan where it eases into like people into the higher cost of European goods or something like that.
States. So in that respect, the VAT kind of acts like a tariff on US imports into the EU. Except there is a major difference. If the business imports goods from the US and then sells them in the EU, they can usually deduct the tax when making their VAT declaration. I'm not a tax accountant, and I'm certainly not a European Union tax accountant, so I'm not going to go into the fine print on this, but essentially the Trump administration views the EU's value-added tax as equivalent to a tariff, at least according to Hatzowitz.
Yeah, I agree. That's how I kind of consider it too. I consider it as a tariff.
Trump may place a 10% or more tariff on EU imports as a retaliation.
And the more near-term impact is that if you increase tariffs, there is going to be some impact on prices. The PCE price level, by our estimates, rises by about 10 basis points for each 1 percentage point in the average tariff rate. And then
machine learning is advancing, but businesses wonder if some machines can keep up.
Let's welcome our new
which in simple terms means possibly 3 to 4% inflation rather than their original 2.5% forecast. It's also caused Goldman to...
I guess you could like try to fuck around with the tariffs, maybe if the economy was like on point. Like inflation was at 2%, economic growth and everything, but we still like, and we've been in a recession. So like this 2025 recession, we've been in a recession. I feels like since COVID. So it's like the economy is still struggling. So you don't do this bullshit when the economy is struggling.
I just think like it's just different groups are feeling it.
Well, now the rich are starting to feel with the stocks going down.
Lowered their projection for economic growth in 2025 from a 2.4% increase in real gross domestic product to just 1.7%. And specifically regarding the chance of a recession where GDP actually contracts for multiple quarters in a row, they raised their probability to 20%. This sentiment was echoed by another big investment firm, JP Morgan, although their view is much more negative. They also released their original 2025 outlook at the end of last year. Their projection for global GDP growth was 2.5%, with core CPI inflation remaining about its then level of 3%. Again, just like Goldman, JP Morgan didn't believe that Trump's economic policies would be as aggressive as they've been, stating our baseline view anticipates a version of the Trump presidency that is tamer than what he campaigned on. A key risk to the outlook is if policy shifts are more extreme. So again, over the weekend, as it became clearer that Trump is adamant on large, widespread tariffs, JP Morgan's outlook has become more bleak. Back in December, they predicted a 15% chance of a global recession by mid-year and a 30% chance by the end of 2025. That risk has been upped to a 40% probability of recession by year end, with team leader Bruce Kasman stating, "We see a material risk that the US falls into recession this year, owing to extreme US policies." And we also got an update from Morgan Stanley along similar lines, a decrease in outlook for GDP growth to just 1.5%, and an increase in their inflation expectations to 2.5%. But as gloomy as all the headlines look this week, downgrade this, worsening conditions that, the economy is actually in pretty good shape. Over the weekend, we also heard directly from Jerome Powell.
What do you mean it's pretty good shape? All the stocks just crashed. What good shape is that?
Powell, the chairman of the Federal Reserve. He gave a speech at the University of Chicago Booth School of Business, providing a much more balanced outlook.
Despite elevated levels of uncertainty, the U.S. economy continues to be in a good place.
The U.S. central bank's goals are to maintain full employment and...
I wish there was some clarity provided, because in a good place, what does that mean? What does the good place look like?
To keep prices as stable as possible. And on those fronts, the latest data is pretty positive.
Many indicators show that the labor market is solid and broadly in balance. The jobs report released this morning showed employers added 151,000 jobs to payrolls in February, and the unemployment rate ticked up 0.1% to 4.1% last month. The unemployment rate remains low and has held in a narrow range between 3.9% and 4.2% over the past year.
All these employers add the jobs. I feel like they always add jobs. I have never heard like the report that we get like that at the end of the month, how many jobs added. I feel like there's never been jobs subtracted. So we keep adding jobs. Where are these people coming from to work?
And I wonder how much they are paying in these jobs.
Yeah, that of course, that's always a question. But like, so there is a finite number of people. So where is these people coming to They added jobs, added 200,000, like they keep adding jobs, but people, there isn't more people. So, or do you say like, oh, somebody got fired and another person got rehired? Oh, that's one added job. Is that how this works? Because that's not an added job. It's just a replacement. So,
and also with the layoffs too, I think when you lay off, I wonder if they qualify as job positions that are now available.
That's what I'm thinking. So like, if you laid off 25,000 people and then hired new 25,000 people, is that 25,000 added jobs? Because if so, that's such a useless metric.
Wages are growing faster than inflation and at a more sustainable pace than earlier in the pandemic recovery. The labor market is not a significant source of inflationary pressure.
Since the COVID spike, the Fed has been able to keep the unemployment rate extremely low, which is great for workers. You want an economy to have high demand for workers and strong participation. Businesses needing to compete for labor are forced to raise wages, which have been rising faster than inflation. But it can also get too hot, which is why it needs to be monitored.
Inflation has come down a long way from its mid-2022 peak. Data released last week show that total PCE prices rose 2.5% over the 12 months ending in January, and that core PCE rose 2.6%.
Low inflation and a thriving jobs market has been fueling decent economic growth.
Turning to the recent data, the economy has been growing at a solid pace. GDP expanded at a 2.3% annual rate in the fourth quarter of last year.
But the key phrase from Powell about the current environment is heightened uncertainty.
Recent indicators point to a possible moderation in consumer spending relative to the rapid growth over the second half of 2024. Further, recent surveys of households and businesses point to heightened uncertainty about the economic outlook.
The Trump administration has kicked off a number of changes. Changes to trade, of course, but also to immigration, government spending, and business regulations. And regardless of whether you agree with these changes or not, it certainly brings a fresh batch of uncertainty.
I would be curious
Uncertainty
to
around
hear
the changes.
Comments.
This video?
And their likely effects remains high. As we parse the incoming information, we are focused on separating the signal from the noise as the outlook evolves. We do not need to be in a hurry, and we are well positioned to wait for greater clarity.
Powell is essentially saying that we might see some inconsistent economic data over the coming months, but that doesn't necessarily mean it'll persist for long enough to cause a serious downturn. And maybe the most important part of the speech was around the economic factors that people always forget.
That would be nice if it doesn't cause significant, long term issues. If it's just like, a month or 2 months and it goes back to normal. I mean, it's an inconvenience, but if that's the direction we headed, that's what it is.
I think also the inaccurate information can also be in response to like people bought up a lot of stuff in preparation for this too as well.
You're absolutely right. Yeah, this doesn't account for that. Yeah, because there has been a lot of spending for people to stock up because they anticipated this. So that might
really
make
sitting and watching.
Yeah, that might the economy make it seem better than it was. You're absolutely right. Yeah.
Recession fears are stoked.
I would put down the U.S.'s outperformance to three things. One would be structural characteristics, and that's more flexible labor market, highly developed capital markets, culture of innovation, rule of law. Thing two is just population. We had a big population increase in 22 and 23. And what was the third thing? Productivity. So we had a really significant burst in productivity. So we don't really know how long this burst in productivity will be sustained.
Technological development has been an enormous factor in keeping the US economy moving forward, and it too is a huge question mark. Just taking artificial intelligence, for example, nobody has a clue how impactful it'll be to productivity. So putting a number on economic growth or a date on when a slowdown is coming is just something that's impossible. And the man who's repeated that philosophy for decades also recently had something to say about all of these economic concerns. He also happens to be one of the greatest investors of all time. Warren Buffett did an interview with CBS last week, and while its focus wasn't investing, his company, or even the economy, he did end up answering some questions about.
I haven't seen him in a long time to recognize that was him.
Oh, no, I recognize it was him, but he looks, he's old now and he still looks fine. He looks like he looked 10 years ago.
Yeah.
About it. Well, to be more accurate, the host tried to get him to answer questions on it.
Can I just ask you a couple of questions about kind of how you see the state of the economy right now?
Well, I think that's the most interesting subject in the world, but I won't talk. I can't talk about it. No,
How old is he?
Buffett did share.
Hey, he's old. He's like almost 90, I think.
I only have known him as old.
Yeah, he's old. Let me see, Warren Buffett.
You say 90?
94.
Wow.
He's old.
Wow, he's in great shape.
He looks phenomenal. You see that? You see what 154 billion does to you?
And he say he eats McDonald's.
I don't know what the fuck he is. He looks great.
His views on tariffs during the interview, but he generally steers away from talking economics, precisely because it's kind of like trying to predict whether it'll be raining in
Like I really thought he was like 86 or something.
78 days and 4 hours.
We run our business so that we don't depend on everything being big hunky-dory always. We run it so that we will be the last man standing. And
what the economy is going to do in the next year doesn't even matter to Buffett because he's only buying businesses that will thrive regardless.
I want to see a video to see what his day-to-day is like. I want to see. It's interesting. He
did have something rather amusing to say about tariffs.
How do you think tariffs will affect the economy?
I mean, tariffs are actually, we've had a lot of experience with them. They're an act of war. Over time, they're a tax on goods. I mean, you know, the tooth fairy doesn't pay up. You always have to just, and then what? You always have to ask that question in economics. Always say, and then what?
Economics is like the physics of money. You can never just do one thing. There's always a reaction, and a reaction to the...
So what is he saying? He's saying, I'm not...
From how I take it is that just because we have tariffs, there's gonna be other outcomes in result to this. So you have to always look, okay, to see what's next. So you can't really just kind of think and look in the future what the results will be. You kind of go with you go with it.
Because how can I understand? He's saying it's like a slippery slope. We start doing tariffs, then what? You up the tariffs, you add more tariffs. That's how I kind of understand it, right?
That's how I
the
take
reaction.
it too.
The COVID situation is the most blatant
because
example.
also there can be other outcomes that we don't even think are related to the tariffs.
Governments needed to borrow lots of money and spend big to protect people and businesses. And central banks needed to lower interest rates to encourage spending and investment. But the consequences of being so aggressive with stimulative policies is the inflationary period we've seen since then.
Consumer prices keep going up. When's the end in sight?
No, prices will be higher 10 years from now and 20 years from now and 30 years from now.
But all of this talk of higher tariffs, inflation returning, and slower economic growth is still only about half the picture. There's another important reason why stocks absolutely tanked on Monday. Valuations. When you buy a stock, you're basically buying a claim of ownership on what the business currently has and what they might produce in the future. The higher the price you pay for the stock compared to its current profits, naturally, the more its profits need to grow in the future for you to make a good return. For the whole stock market, you compare the price of the S&P 500 index to the profits of those companies. And today, the market is relatively much more expensive than across most of history. And even more interesting, you can actually look at how stocks have performed based on how expensive the market was at the beginning of the period. JP Morgan did this over 27 years, and it shows that when markets have been this expensive, the next 10 years of stock returns have always been between +2 and -2% per year. Quite the change from the 20+% per year returns we've had in 3 out of the last 5 years. But it's also important to remember that even this doesn't prove that the stock market is overvalued. The market is expensive relative to past periods, but it's also entirely possible that companies grow earnings faster than past periods and that prices are justified. We'll really only know if today's market was expensive in hindsight, when we look back and see how profits grew and whether they met our rosy, optimistic expectations. But I think going through this stuff does help to keep your expectations in check because 20+% yearly returns is not normal. I hope you guys enjoyed this very quick update and
Interesting video.
Can I see the comments?
Yeah. I don't know what I got out of this video, to be honest. So is the recession coming or no? I don't feel like I got an answer.
It's to be determined.
The answer is to be determined. Like duh. VAT in the US sales tax that is paid on every product sold to consumer. That is not a tariff at all. Yeah, but there's like a customs fee. Like whenever you import something like over $25 in Lithuania, you have to pay like import fee. So that's what I was talking. I don't know if it's called VAT, whatever. There is a import fee. So that's what I was referring to.
Recession is when everyone
loses their job and the corporation get a bailout. This one has already happened. How to start a recession: fire people from job, raise prices for everything, allow profits to be sequestered at the top, keep as many jobs as possible part-time without benefits while being very selective about employment numbers to hide reality.
It seems suspicious.
A lot of people are picking on the VAT definition. Yeah, like
I don't know what it is.
So what they're saying, VAT is
people in Europe are picking apart the VAT.
Yeah. So VAT is a sales tax, but what I was told, there is an import fee.
Oh, it's like a
no. There's a sales tax, that's VAT, but there's also an import fee. That's why, because whenever I ship my family stuff, they have to end up like paying extra.
They do?
Yeah, like there's an import fee they have to pay.
Okay. Yeah, everyone's talking about the VAT. Oof. Guys, of course, let us know your thoughts. Don't forget to like, comment, and subscribe. Join the Discord and share as much kindness as possible.